I hope that you are all doing well. I just want to apologize. Obviously, I couldn't record this yesterday. I tried. I just couldn't sit up without feeling sick. And I apologize for the sound at the minute because I'm back in the hospital this morning, and I'm recording from my MacBook microphone. So I don't know how good that is. Sometimes it's pretty good if I talk like loud enough to it, but sometimes it does catch background noise, but it's fairly quiet at the moment, so it should be okay. But anyway, I hope that you've all been well. I hope that you've all been training safe and had a great weekend as well. Um, and we'll crack on with another outlook. Obviously, I didn't post one last week. I didn't feel that was required for me to do so anyway. There wasn't anything massive to actually discuss, to be honest. We'll start off as usual with AU. So let's see what the structure is doing at the moment. So for AU, what we have is we have our range high, our current range low. Our price is currently at this bullish OB at the moment. It has wicked out. It's just whether for me it's because it's not a body break, it's not relevant. So this OB is still valid. And in fairness, this would just literally be something that is taking liquidity from that low and then continuing to be bullish. If you want to be more cautious about it, obviously don't trade it if you're in these scenarios. For me, I still trade it anyway. I don't really feel it gives me much of a difference. Even on the 1 minute or my entry time frames, I don't see that it provides me too much of a loss, if you know what I mean, in terms of probabilities. I don't lose out too much when that happens. So we know that we have this direction already confirmed. I doubt the 4 hour is going to be any different than that. I mean, the only thing that I can say from the 4 hour is because of the way that structure is now, we do have major structure points that you can follow where you have this low, this high. Once price breaks that high, you have a defined entry point where you can essentially do, you've got your daily, you can do a 4 hour confirmation, and within that you can do a 1 minute confirmation. So effectively you've just done an inception entry, obviously based on the higher time frame. So you can do that in that case. And you don't even need to go to the minute time frame or any lower than that, because you can even do, for example, when price comes here, you can go to the hourly and do the exact same thing, look for your confirmation and continue to go higher. But we already know that obviously what our direction is at this point, in terms of going out to take out the daily high, which is our aim. Let me just check the hourly to see if I've missed anything. So even on the hourly, I mean, we've just had a break of structure, but not the clearest, not the clearest of POIs. I mean, in terms of where the imbalance is, so the actual OB that we have is here, but in terms of the imbalance, there's nothing here because that's already been tapped into. So all we have is this POI here, which we could potentially do. If it was me, I would rather just wait for that 4 hour break if that does happen. However, if price does retrace back now and we've got this hourly POI to go off, what I'll suggest is obviously just doing a confirmation within that and seeing if price reacts. But bear in mind, this, if price comes here and still goes lower, it's still valid to go long from unless it takes out this low. I think some of you get confused in terms of where your OB is and the OB or range violation. You think about in the what your structure and ranges are. The only way that this would be invalid is if it goes out to take out this low. So there's nothing really to be too concerned about when price does wick below your POI in that case. So don't worry too much. But that's the closest to the extreme that you can have. You won't in general, you shouldn't really be in those scenarios as such. It's quite rare. I don't really see those scenarios myself, to be honest. Because we should be looking at the most extreme point anyway for our POIs. Well, I know I do specifically. It's more depending on how you want to do your refinement. If you don't want to, I mean, you can be as loose as you want. I mean, you can use the whole bearish range, which is obviously massive, or you can use the whole OB there without using the idea of imbalance. It's completely up to you. But for me, I find that there's more of a reaction when you have where you have that imbalance. That's just from what I've seen from personal perspective. There's no real rule set about that. The only thing that you need to understand about the rule is our rule set is the structure rule set. In this case, is is deciding when it's invalid and when it's not. No, when it's invalid and when it is valid. But apart from that, on AU, there isn't anything further I need to discuss. So we can move on. We can move on to GJ. So GJ, last I checked, so I don't know where my marking's gone, but this was the 4-hour POI that we were going off, right? To that range high. And it was from, I believe, yeah, it was from this daily POI. So we were aiming, so this was a few weeks ago where we had this reaction initially and we were aiming to take out that low. But obviously price didn't do that. But remember I said that this is still valid. It's just the fact that price has gone further up into the POI in order to mitigate something further in and then continue. And I think it was 2 weeks ago on the weekly outlook I mentioned about making sure you paid yourself in this range, because you can't say that price is going to definitely take out this low. Even in this situation, we can't say that price is definitely going to take out this low, even though that's what we expect and that's what we generally tend to see. If you aren't paying yourself on these huge moves, then you need to rethink about how you're managing your money and how you're managing your risk. In that case, you have to remember you're here, you're trading to make money. You're not trading to cash the biggest trades or cash the prettiest looking trades or have the best looking charts. It's nothing about that. It's about making sure that you are making a return and reminding yourself that you are here to make money. Effectively, you're here to grow your account. So in this case, what we can see is obviously prices obviously going further into the POI itself. In terms of where you could have traded from in this case, to be fair, this is same as the AU example where you had this and then you obviously got your 4-hour POI and you could have confirmed that within that. We could even check the hourly if there was something on the hourly. So you don't even need to go to the 1 minute. I mean, to be fair, this is huge, isn't it? That's a massive range. Where did that break? It broke there, and then your entry point would be anywhere here. To say if you didn't want to go to the minute time frame, you could have entered like that. Obviously, your risk to reward won't be as good, obviously, as you can see here. The only way you can improve that is by doing the 50% of that, which probably doesn't even reach. Or does it? Oh wait, it should be of the OB itself, which it does, surprisingly. And then you could have done that, which obviously halves your risk. But what I'm trying to explain is the fact that you don't necessarily need to know or be able to trade the minute time frames to be successful. I mean, thing is, you could have caught this would have been a 1 to 15. And it's fairly easy in terms of you had enough time to place that limit order and you already know why you're placing the limit order. You've got all the rules in your favor. It's just the fact that you don't have I wouldn't say you don't have the best risk to reward in terms of, I think some people will look at this and say, oh, that stop loss is too big or the risk to reward is not high enough compared to considering the fact that that's a 300 pip move. Oh, bloody hell. That's a 390 pip move. Obviously we would expect higher risk to reward, but it's not about that. It's about your personal preference, and it's about what you're comfortable with executing and what you're happy doing. Because thing is, this is probably this is a very high probability trade, in fairness, and it makes complete sense. This is Inception using the higher time frame. It's just the fact that this may not be appealing, even though it's a very good trade. And this is why I keep mentioning about, especially those in the course program and the mentorship program. You guys have the community chat, so you'll see what other students are doing. Don't compare to what others are doing in comparison to what you're comfortable with. You have to understand that you need to learn more about yourself as opposed to finding what others are doing, because you'll never be able to replicate myself. You'll never be able to replicate other students in the group, because everyone's risk tolerance is different, everyone's understanding is different. Even though you follow the same rules, sometimes people make up their own rules from what I've seen and the questions I've been asked, and it's completely fine. But you have to remember, if you don't understand yourself, you don't understand your behavior, you don't understand what you're comfortable with, you will struggle to find any form of consistency. Like, for example, doing a daily, a 4 hour break structure, and then the hourly confirmation, it may seem slow for some people. That's taken a long time to even catch that trade. I mean, the POI was marked when? On the 28th of December. Not in 28th of December, when this break happened. The break happened here. So it happened on the 30th of December. Price would have come into your POI when? On the 18th of January. But then we only had the confirmation on when? Oh, wait, hold on a sec. That's not even a break of structure, even. Sorry, I got my low wrong there. Okay, I got my low wrong in that case, but my point still stands in terms of the 4 hour reaction. I mean, you probably could have done. Well, hold on. Now I need to find something. You probably could have done, I suppose, hourly here, and then done. Let's go. Is there anything on the 15? Probably not the best price action. Gosh, the range is all the way down here. Nah, that wouldn't have worked. Actually, it would have. Because this range, obviously, you would have lost on that one. That would have got disrupted, and you have your new range. But you could have got your IM and your SR here, so you could have entered off here. But the point still stands, even though my structure was incorrect there. So ignore that structure point. Ignore that. What I'm trying to say is find what you're comfortable doing. I know I just waffled a fair bit about that, but find what you're comfortable doing going forward in order to find any form of consistency. What I found is over the years, especially when I was learning, is that I was trying to replicate everything my mentor was doing, even though it is set rules, and I realized that I was not achieving the same results, and I was being harder on myself because I wasn't achieving it. But then it was more about, I needed to start. It was only randomly I just started looking. I was like, oh, this is exactly it. This must be it. Then I started testing myself and started seeing a repeated pattern of the edge, even though it's the exact same rules. It never made sense why I wasn't able to achieve the same results as him, for example. But now it was more, I had my own vision for it, and that's how I developed and broke through that struggling phase and broke through into my consistency. Which is weird with the mechanical edge, because in theory you should have the same rule set basically. Not same rule set. You should be in theory taking the same trades, but sometimes we may not see what others are seeing. Same like James's model. I think I see some of you take the same trades, some of you don't, because you don't see the exact same way, or you don't see the same mitigation, for example. It's a bit similar. It's similar to that basically. Now, speaking of this move, actually, to be fair, looking at it, so we do have this 4 hour range high, 4 hour range low, breaker structure. So your range high is from here, so you do have a POI with prices reacting off now, which you can continue going. So you can do it that way, basically. Anyway, let's move on to GU. What the hell? Okay. So GU, okay, so this was the POI that we drew a few weeks ago, and as expected, we are going to take out this low. There's nothing really for me to say. We're expecting to take out this low as a form of liquidity. The only thing to bear in mind, I'm pretty sure this was, I don't know why I'm struggling to see structure at the moment. There we go. Okay, so because we had this low from this high, so we do have this bullish break. Just be aware that price could react bullish in this scenario. So this is the case where if we're taking shorts from here, to make sure we have paid ourselves in this case. I'm so annoyed I went break even on my trade here. I had a great entry as well. It wouldn't have gone back to my entry as well. It would have been a solid move, but oh well, it is what it is. But the thing to bear in mind is, even though we're going short here, right, where we do have the bearish two rules, which holds more value than this bullish intent. Just bear in mind that this still could be a valid reaction point anywhere within here, so just bear that in mind. But I don't need to discuss anything further on that one. So let's talk about EG. We just had this bullish impulsive break. I keep saying I'm going to remove this from the watch list, but I don't know why I keep looking back at it. So in this case, all you have is this obviously bullish POI, because now we have this bullish intent. I suppose that's it, to be honest. We'll go to EU. So EU, we've just had a bearish break, which was here, and then we've got this bullish OB, which we can refine down to this one, where the imbalance was, and the break of structure was here. There we go. Why the hell's it dots? I didn't do that. There we go. So now we have bearish intent, but in terms of going the opposite way, yeah, so in terms of going the opposite way, the only thing we can be wary about is the last bullish OB that we have here, because price is obviously bullish until that point, and I believe, so that was a last range high, last range low. We had some sort of mitigation play, so we had bullish order flow in this case. So this OB still holds value, so just be wary of that. But in this case, if price comes to react off here and then goes back to this POI, this range, just be wary that it could react and come lower. We don't know. It's just the case of being able to be aware of where to buy and sell from. And this is something that you should be able to plot on any time frame that you're looking at. Whatever base time frame you have, you should be able to reprice like this. And it should be the point where, like, these outlooks don't actually take long. The only reason that why the videos are actually longer than they should be is purely because I talk a lot. I understand that I talk a lot, but it's more in terms of doing the analysis. It should be easy in terms of following your structure rules, following your POI rules, understanding your refinement rules. The reason why I said your and emphasis on yours, because refinement comes up a lot and is the only part of the course but I don't have a set rule for, purely because it's more of a personal preference as to what you are comfortable with in terms of your pip ranges for either your entries or your POIs. It's completely dependent on you to find that. I can't decide that for you, and I can't decide a perfect refinement. I mean, you guys should know mine by now. You should know James's by now, and it's up to you to find what you're comfortable doing. But in terms of doing the analysis, you should come to the same result regardless of who you are, because the rule set never changes, the structure never changes, our POIs don't never change. We always stick to the extreme. We always have a maximum of 2 POIs in any given direction at any given time. So you should never really be confused about whether your POIs are correct. You should, or whether your structure, I was going to say whether your structure is correct, but I understand that some of you are still learning and still find structure difficult, so I completely understand. But once you get structure correct, you should never be in that scenario where you feel like you need to ask for confirmation or further clarity of whether your markups are correct, basically. But apart from that, there's nothing further for me to say. I don't think. Apologies. I know I probably sound a little bit dead. Apologies for that. It's not as enthusiastic as normal. But I hope you all have a great trading week. I haven't traded the last 2 days, which is obvious why. But in fairness, even though I haven't traded, I have gone back to look at what GU and EU has been doing. Not really EU, to be fair. I've just been following GU at the moment still. And there's literally been no trades present, and I think that's a good thing to discuss, because I was going to say it in the last, I was going to do an outlook last week to talk about the previous month. So for example, the previous month I took 3 trades. I ended up at 52R, for example, and what I'm trying to say is from that I took 1 loss, 1 4R and 1 48R, I think it was. I only took 3 trades in that whole month, whereas some of you are taking like 3 trades in the last hour or so. That is a slight exaggeration, but what I'm trying to say is that less is more. It's about just being patient. I think the reason why some of you are trying to push for that many trades is because you're trying to pass a funding challenge, which I completely understand. It does add another level of stress, and maybe trading my disruption model may not be the best for passing a funding challenge purely because of the lack of trades that you'll have. But it's about understanding and being comfortable with the probabilities and being comfortable with not being in a trade. Like for me, I don't really care whether I'm in a trade or not, but I understand, because I understand it from a lot of your point of view, because I was in the exact same scenario where I was trying to find a trade whenever I could, basically. Especially when I was working full time, I was trying to trade whenever I had the time to be on the charts. I was trying to catch anything, and I always thought that I'm gonna make more money that way, and it was just never the case. It is. I never understood exposure. No one ever explained that to me. Even my mentor never explained exposure or risk to me. I needed to learn that from elsewhere, as in I needed to read up and understand what risk was. I had no idea. That was a one downside actually to his mentorship. It wasn't really mentorship as such. It was just more you're given a set of rules and an edge to follow. You have to work out the rest. But um, what I'm trying to explain is having that form of comfortability going forward. And again, if you're trading a funding account, whether you're trading a challenge or whether you're trading the actual funded account, if you're trading the funded account itself, you shouldn't really be stressed in terms of you shouldn't be worried about meeting a set criteria. The only criteria you have, I suppose, is the loss limit, but you don't really have any profit target to reach. So I think what happens then is because you're chasing, you're trying to chase so many trades because you're trying to make as much as you can, say on your first or second month on your funded account, and you end up losing the account because you're trying too hard. Even though a lot of you may know the rules, you understand what you need to do to succeed. You understand what you need to do to be profitable, but now you've got access to say 100,000, for example. You're all excited, and I fully understand the excitement. It doesn't mean that you are guaranteed to make a return straight away on your first month. And obviously, if you don't make that return, you're not going to get your refund. So what I suggest doing is aiming for a few percent. And a few percent on a huge account, because 100k is a massive account. A small percentage of that is massive. You have to think about it in the long run. That capital will grow. It's just about you don't need to get a 100k withdrawal right now. Yes, it'd be nice, but think about it realistically. What you can achieve with, for example, 5k, or not even that. Yeah, let's say 5k, for example, because that's achievable, I suppose. 5% of 100k, it's achievable. Let's think about it that way. You're making 5k by literally punching buttons onto a platform. I think you need to show appreciation to the fact that you're able to do that. Whereas, you could be working long hours. I was working, when I was working full time, I was doing 40 hours a week. I was doing 40 hours a week. And when I first qualified, I was taking home after tax, I think it was 1500 or 1300? I think it was 1500 after tax when I first qualified. And I was doing 40-hour weeks. Whereas now you can do a few hours a week, make that 5%, and you're done. And you've just made 5k from the lack of hours, and that's what you're trying to trade for. You're trading for that time. And again, I just started waffling again, so I will stop. Anyway, I hope you all have a great trading week. I should be back trading at some point. I'm not in a huge rush. I think, to be fair, I was saying to James, a lot of the times, even like last year, I was taking trades to the point where I was taking trades for the sake of content, because sometimes I just didn't really feel like trading, but I just wanted to put content out there. Whereas this year, I'm not too fussed. It's more about, I'll just trade as and when I want to. I don't feel like I need to prove a point anymore. I've gone past that. I've gotten past that stage, so I will trade as relaxed as I possibly want to be. But we'll see. We'll see how things go. Obviously, for you guys in the mentorship, I'm sorry I wasn't in the Zoom call either. But yeah, I've watched the recording. There wasn't anything outstanding, so I don't need to do anything there. For you guys in the course program and the access program, obviously that wasn't applicable to you, so you can completely ignore that. But anyway, I hope you all have a great trading week. Trade safe, stick to the rules, stick to the plan. And take care.